The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach, dear friends, do we go? As always, I love it when you join me here at this time.
The following takes place between 2 p.m. and 3 p.m.
It certainly does. Off 10 points in the S&P cash. Volume is light. In fact, it's 10% lighter than it was at this time on Friday. So very light volume, down 10 points. Kind of hard to understand how the news cycle may have affected the market. Certainly, we have a bunch of news coming this week. I suspect it will drown out, at least in the financial arena, the bad news we had over the weekend. But just a tick over 2 billion shares on the New York Consolidated Tape is light. We've got a Tuesday, Wednesday Fed meeting. The announcements at 2. We've got a press meeting at 2:30 by Janet Yellen. And it's got just about everything you wanted. We've got stuff on Thursday and Friday. Then we go into the Brit exit vote, which is the 23rd. So what is that? That's that's a week from Thursday. So we've got a lot of interesting news. Of course, the Chinese curse was, may you live in interesting times. And I think we have that. But not a lot of juice on the way down, at least so far today. But again, we were looking for lower prices as we went into expiration on Friday. My guess, though, is we're going to have a great deal of volatility after the Fed meeting Wednesday and probably a little bit into Thursday. Friday probably will be quiet after a wild 2 days. And then we're going to get ready to wait and hurry up and wait to go into the Brexit vote. And if the rantings and ravings of the Prime Minister of the UK is any kind of signal, he's out trying to scare the retired folks over the weekend. So when you come to that level and that politically that low that you're out trying to scare old folks, generally a good sign that you're scared, that you will be out on your rear end, which I suspect he will if this vote goes the way that it is looking. There was a 10-point spread on a poll on Friday. That's 9 or 10 points. Even if you took out the margin of error, the leaves are 6 points ahead as of Friday. I have no idea who did the poll, but it's I think it was The Guardian or one of the other big newspapers. But kind of hard to tell, but there's certainly a definite version, and of the polls that they take daily, it tends to look like they are getting about 0.5% or 1% per day on the leave side over the non-leave and stay side. So if we can figure out how to make money, please call and let me know. But I think they're leaving. It's just hard for me to see exactly how you make cash on that. I think a lot of people, and a lot of it is already in the markets. So the question would be, is there going to be a surprise come election day? But it'll be hard to say. In the meantime, we need to get our party started.
And it's all just a little bit of history repeating.
It is. And on this day in 1991, the New York Stock Exchange begins after-hours trading for the first time as the two crossing sessions of the trades among institutional investors extend the trading day to 5:15. And, of course, now it just depends on what you're doing, but you can probably trade just about anywhere at any time, maybe save 15 minutes between sessions of different places. But for the most part, it's If you want, you can on listed New York Stock Exchange stocks and some select NASDAQ stocks. I think you can trade about 23 hours a day, but not a lot of liquidity in those after hours. It used to be a great deal more liquidity even than there is now. Of course, on this day in 1986, real-time market data takes a big leap forward as the Standard & Poor's begins disseminating the value of the S&P stock market index every 15 seconds. Previously, the index price was updated once a minute. It's not entirely clear why the ability to check the market almost 1,600 times per day should be important to investors, but some people still consider this progress. And of course, one of the most interesting things as I dug deep in writing my own software for charting was people asking about the different prices and why S&P was one place and sometimes it wasn't as high in one place as it was another. And that was because some people were still doing it the old 1 minute way. Some were doing it on 15 seconds, and some were doing it every second for the S&P. So as you go through historical data, you can find sometimes where the S&P price is a little higher than maybe some other prices somewhere else. And it's literally that 15 seconds or 1 minute, or maybe everybody went and clicked the sell button or ran the stops, and then it came back. And some data feeds will show it. Some feeds will not, depending on how often they figured out the actual cash value of the S&P 500. So always a deep inside baseball reference there. Apple has its big show going on. I was listening to it in the kickoff of my show. But basically what we can look at is their developer conference. Basically, so far has been nothing but the things that they probably should have had already. They are showing Siri on the desktop, on the what they now call the Mac OS. They have 4 distinct versions of their operating system, depending on whether it's on a phone, tablet, laptop, and or desktop. But kicking off some new versions of that, and basically, so far at least, I don't know what they're showing this hour, but it was a lot of, there's a saying in programming, especially for stuff that goes into the compiler if you're writing in a particular language. But sometimes there's just like a keyword that you'll throw in there that kind of bridges problems you didn't, the original programmers of the compiler never figured out. A lot of things are like Band-Aids. They just get one on top of another. But it's called synaptic sugar. And it is a easy way, kind of like giving you some horrible medicine with a little sugar in it, to get it to go down, because coders now they're kind of like those nitpicks that went through books and would, go and correct spelling and stuff in a book that's published. Not like those people who are going to go back and reprint the book. Anyway, a lot of people are like that. But anyway, the synaptic sugar is a big deal. And they're kind of in there, just polishing and making a big deal out of what I'd say 99 out of 100 people would never notice. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Yep, there it is. I just hang on just 1 second. I was having a little conversation about Mac versus PC. I just wanted to fire that little link off to my engineer. Anyway, Apple has a big problem. I discussed it in the Tech Insider on Friday. I will gently touch on it here, and that is that people are basically at the point now where they are almost downloading no new software for their phones. And that is making it incredibly tough, if not impossible, to make money for its developers. One of the things that they're going to show today, I haven't seen it so far, checked it during the break, is a subscription model. So hopefully people can at least get a dime if they can't get $1 for some product that they're selling, and maybe even get $1 a month instead of just selling it for $2.95. But my guess is it's not going to matter a great deal. We've hit a wall where at least iPhone users have got the apps that they want to use, do not really go looking for new ones, and the new ones that they buy are not buying any really to speak of. The average user is downloading one and buying one every 6 months, and this is crushing the developer side of Apple's once huge market opportunity. But as I always say, probably the thing you should run from the hardest is when people, especially people on Wall Street, start talking about total addressable market. That's like everybody should be able to buy one of these things, and that is the ridiculous and idiotic belief that everybody in China could buy a smartphone or everybody in India could buy a smartphone, when a smartphone may be what they would earn in 2 years of work. Probably not a viable idea in India for 70% of the people. And even in China, it can be as much as a fourth of the yearly income for people that work in the city, much less people still working out in the weeds and in the rice paddies. So a total addressable market's always a good way to get into real big trouble, because the projections are always insane, because whatever your total addressable market is, it's never actually the people that would buy the product that hucksters tend to push. Anyway, we'll see what else they have to show today. Siri on the desktop seems to be the biggest thing. A lot of synaptic sugar on top of the iPhone to make a few things neater and slicker, but nothing that looks to me like it's going to change the amount of money that Apple makes. Apple off about $1 and $1.30, $1.38 last time I looked. What else is going on out there? Talked a little bit about a theory that I had kind of ruminating about Bill Simmons. Another article about him Sunday was out, and it certainly looks like they lost a huge deal. HBO is going to start broadcasting his show June 22nd, but it certainly looks like Bill Simmons is going to spend upwards of $100 million to launch his Netflix version of ESPN. In fact, it's called BSPN, Bill Simmons Podcast Network. And he's going to be doing a great deal of this, but he's going directly after ESPN and doing it online and on demand instead of just the endless kind of, what would you call it, the cable news network kind of model, where they just have people coming on and spouting things, especially like today where no one knows really anything, and they come on and just speculate ad nauseum. Maybe he's working on something that will be more concise, and it'll take whatever time they need to actually get to it. If it's 10 minutes, it's 10 minutes. If it's an hour, if it's 2 hours, it's 2 hours, depending on what goes on the news flow for actual sports. But I thought there was something going on in this, but the article over the weekend showed just how much money he is pumping into what could be the Netflix of sports. I thought it was very interesting. And after my thoughts on Thursday about it, also very interesting to me. Anyway, don't watch TV? Yeah, that's good enough. It is a mad market. And I don't know what else you can say about it other than that. We're off 10 points in the S&P cash volume, 2.1 billion shares. So volume continues to be incredibly light. Let's take a look at some of the stocks. Of course, I had some people email me already this morning asking me what I thought about the Microsoft deal. I think Microsoft, it's going to be kind of probably a deal that will make them a little money. I don't think it's huge. What it does do is take away a great deal of what Facebook wants to get into. And sometimes just the enemy of my enemy is my friend. But I do think long term that LinkedIn always had better ability to make money than Facebook. Facebook, of course, more of a fad, in my opinion. Eventually, I think people are going to move on to other things like Pinterest. Young kids are very fickle, and of course, that's 80% of Facebook's business and screen time. And the question is, do you want all that kind of stuff always to be out in the public? Apparently, kids probably going to learn that their privacy is something they would have relished, and they're kind of like getting a tattoo when you're 15. And I think maybe by the time you're 35, you would have thought maybe there was a better idea. Maybe your parents could have stopped you. I think there are going to be people looking back in the rearview mirror thinking that is so. But hard to tell. But it looks like they paid a fair price for it. Doesn't look like they overpaid for it. Does certainly work in their deal of putting something together to go after Slack. Slack, if you're not familiar with it, is probably one of the hottest startups in Silicon Valley. Think about an email system that can be set up just for the people that you want. and you can set them up in teams. It's very good in businesses. Apple, Microsoft, a lot of these big companies use Slack for design teams. It's all private. You get your own private server. No one else can figure it out. You can send things out of the circle. But if you need an email system, if you need a group all pulling on the same rope the same way, especially like projects, new cars, new electronic devices, if you're somewhere in that creative process of building something very big and new, Slack is probably one of the best tools. Early on, we used, in the company I was in the 90s, we used a version of Slack that kind of went away after time. It was just too hard to use. It was from Lotus. Slack certainly looks like it's at least 10 times better than that Lotus product. I think it was called Lotus Act. Maybe was that what the name of it is? I hated it with a passion. It never worked quite right. It was always hard to put groups together. Never really kind of understood how it was supposed to work. But Slack is the word in Silicon Valley. We'll be back after this break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We'll look at a few other stocks that are moving, but I guess we can look at MSFT real quick. Since there will be no more LinkedIn, although LinkedIn is supposed to keep its name and what's going on with it. They said that there will be a Chinese wall between the two companies. I don't think that will last long. The plan has to be incorporating LinkedIn as a messaging service between people that want to say, yes, I do want to know this person. Yes, I want to get email from them. Email is a blessing and a curse. My guess is that the Slack system, along with the kind of things that you see in LinkedIn, where you get to choose who you associate with and who's in your network, it's going to be a big deal, and probably the push to get rid of traditional email in the business and office. And I think that's going to be kind of the push for LinkedIn, and that is also making the money they have made in the past by referrals and headhunting, but much more as the way as a centralized guard for who can send you junk mail and who can't in the near future. Yeah, they're big. LinkedIn is always big about spamming people that are outside and not active on their system. I get probably 10 Facebook things a day. There are more people that you know at Facebook. And I said, well, I don't really like people. Can you just quit sending me this stuff? And they keep sending it. What else can you say? I think the last time I looked at it was 2.5 years ago or 2 years ago. And they still send me stuff. Do you know so-and-so? So-and-so knows you. People want to know you. I work about 10 hours a day already. I don't need any additional people sending me stuff I need to read, for the most part. That's good. Anyway, other things going on besides LinkedIn and Microsoft. Microsoft down a little bit of volume out here. I still think that they're doing everything that they can do right. Probably got a little ahead of themselves at 56. I thought they would at least come down to this $48 level. We'll have to see how the market itself likes that. When we look at the market now, we're basically still about 150 million shares short of what we were at the start of the show on Friday when everything was moving. So volume was light that day, came in finally at 3.5 billion. To really give a good signal, you probably want about 4.5 billion. So you were about 25% short on the overall volume. On Friday, make me think that there had been some big deal that had happened. I continue to have my theory that we are in the doldrums. Volume or wind is going to be pushing us at the front. As soon as we get ready to go to the front, it'll start coming out of the back. It'll come from the east. It'll come from the west. It'll swirl around until some of this horrible amount of unknowns is washed away from the market. But I'm not seeing the kind of volume that would make me think anywhere this market is ready to roll over now. Maybe it rolls after expiration, but everybody's pretty much set thinking that this market pretty much expires right around this level, somewhere under 2,100, somewhere probably over 2070 on the S&P cash. So we will look at it, but probably a great deal of volatility on Wednesday and Thursday, and flat Friday most likely. At least my thoughts so far. What else do we have out here? And usual suspects. Just see if there's anything else out here. Baidu gets downgraded. TRQ, one of those miners that looks like Rio Tinto is looking at going after. This thing popped up a little bit out here today, giving at least half of it back. A lot of volume, though. This 305, 308 level from previous, what is that, the April 21st and March 18th levels look like they're interesting. Turquoise Hill Resources. So we'll look at that, see if there's anything else out here. A denial, so you know it's true. WPG is off about 6% today. They had a lot of rumors circulating around a buyout. They are saying it is not so, and quit bothering us. And of course, A lot of people thought maybe they would get bought out. Why this thing spiked on June 8th and pretty much giving it all back, but on lighter volume out here. Good rumor is hard to kill. Let's look at some other stocks of interest, and we will move ahead. I wanted to see how some of these are moving. 21 VNet Group, very light volume test of a previous low on Friday. Today, volume is lighter yet still. I'm looking at the 5.9 million share day on May 25th. We went into it, closed below it on Friday with 2.4 million shares, so half. Today, what are we going to call it? 1.4 million shares so far today. So probably even going to come in lighter than that 5.6 million day. So there's one to take a look at for a bounce. U2 Incorporated. I wonder if they have a CEO named Bono. Anyway, this one I've been watching just because it came up and kissed its December 30th high. That high had 3.7 million shares at 29.45. Went above it on the 9th, pulled back in. But, of course, the volume it came in on was 450,000 shares compared to 3.7 million shares. And since I'm not as familiar as I should be with this company, we'll look up the profile and see what it has to say. Cloud-based services is software solutions for nonprofit colleges and universities to deliver education to qualified students. It's cloud-based software as a system platform, include online campus, online learning program, blah, 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 blah. Okay. So a degree that no one thinks is a degree. That'll be my word on it. Up here, testing volume. But what you really have to look at is this super light volume move from March 24th up to this high. No energy in it, no energy at the high. I'm going to have to check that out a little bit further. Other stocks, self-storage company out here that's been doing pretty well, kind of making a polytrend top. Wanted to see how this came into its big down day of May 20th to 102.30 with 5.8 million shares. Into it was 630,000 shares on Friday. Today, just 300,000 shares. So again, some of these stocks coming back and giving a floor and some giving a ceiling. Silver Wheaton's been playing around at this top with kind of light volume for the last 3 or 4 days. May 2nd on this one, 21.14. Went through it on the 8th with 8 million shares, so 4 million shares light. Or 33%. It's then gone sideways, kind of. Even opened up a little higher today and pulled back on lighter volume. Not a great sign. Energy wasn't all that exciting except for the gap up on the 3rd. Anyway, we got many stocks to look at here as we come back. Piedmont Office Realty after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as always, I enjoy all my listeners. And you can always email me at path@tfnn.com. You can call me at 877-927-6648. Post a message in the den. And, of course, as always, if you like the show, then at least tell 2 people because...
And he tells 2 friends, and she tells 2 friends, and so on, and so on, and so on.
I'd just like it. I'd take a first so on. Just a so-so. Or just a so-so. Anyway, tell a friend. Power Trading Hour every day, 2 to 3, over most of TFNN.com. Piedmont Office Realty, PDM. Nice high out here on May 10th, $20.92, 900,000 shares into it with 500,000 shares so far today. So let's take a look and see how that comes out. In fact, I think the volume's less than that. Today, 219,000 shares so far. So can be some up here with some fairly light volume. Palos City Holding Corporation. I'm going to have to find out what these guys do. Another one up here, on a light volume, 500,000 shares, where this thing spiked on April 21st, and it sold off 41.50 on June 8th with 290,000 shares. Held the high, but of course, a couple more days, and we're right back into that candle, even in the lower part of that candle. So it continues to be problematic at best. Let's find out what Palos City, right? Okay, profile. Let's see what these guys do. Provides cloud-based payroll and human capital management software, medium-sized organizations in the United States for enterprise-grade payroll processing and administration. HR portals, web time, enhanced productivity. This looks like just something that someone had a buzzword creator and just cranked it out. Hard to tell what these companies do when too many PR people get involved in the soup. But that's it. Palos City. Don't know them, but nice light volume test of the top there. Nomura Holdings. There's a little penny stock out there. Nielsen. Kind of interesting. I've been wondering about how these guys have been doing. Of course, this, I think, is the same. I'm pretty sure this is the same company involved in the Nielsen surveys for what you watch on television. Pretty light volume test of its April 20th high, $54.59. Went to $55.06 won 1.5 million shares back into the trading range today. Again, not a lot of juice to go higher, and of course, not a lot of juice to go lower in many of these out here today. And we're back at 2098. We're just off 6 points on the S&P cash now. Volume still is ridiculously low, and we have just now, 245. We've just tested the volume that we started with this show on Friday. So volume wasn't big on Friday. It will be even less today. I would not be surprised to see that we come out and close flat or even at 2100 on the S&P by the end of the day out here. A lot of people probably shorting this, thinking that the market's ready to crack. I just haven't seen the kind of volume and follow through that you would think if the market was spooked either by the events in Orlando or the Brit exit or the FOMC. Everybody's going boo, and the market is saying it's time for some Z's. IDEX Corporation, nice little spike on April 19th, 800,000 shares, $86.54. Got into it with 320,000 shares on June 8th. We have pulled back. A little doji out here today, and not a lot of volume either way. In fact, Friday down on light volume 2. Again, light and variable, not enough energy to go higher, and not a lot of wind at the back to push these stocks lower, at least so far. I would like to see a lot more of these stocks at highs giving signals other than just light volume. But there are many of them. General Mills going into its April 5th high, $65.49. 7.4 million shares got into it on the 10th with 2.7 million shares. It's back into the trading range. So it went 1 penny above the trading range. It's back into the trading range. Energy was about what it was on the way up and what the way it was down. So it continues to be light and variable. And my theory of the doldrums, in my opinion, still holds. Sinosure, April 27th, $51.59, 930,000 shares. Spiked that on June 8th with 53.33. So what? $1.80. Let's call it $1.70 higher on June 8th with 540,000 shares back into the trading range on Friday. Today, a little doji out here on no volume. Again, on these kind of days when you test highs with very light volume, you normally get some kind of sign of weakness coming out of these to let you know instead of just sideways action. Of course, this is expiration week, so you want to keep an eye on that. If you're looking for bullish signals, AMC Networks, it's going to be a long, hot summer. And I think they have the theaters and the television. Let's make sure here. Cable television brands, National Network operates AMC, WeTV, BBC America, Sundance, and some other ones. AMC Networks, founded in 1980. No, nothing to do with the theaters. Always wondered if they had anything to do with them. It says not here. Anyway, February 11th, $60.30, 1.2 million shares. Into that on Friday with 760,000 shares today, less than 500,000 shares today, and maybe even a little bit of a inverted hammer out here. We'll have to take a look at it. Energy on the way down. I do like the energy from May 11th into the June 10th low. It was a little lighter. I don't know if I could jump up and down on it. They got a lot of series that are trying to kind of getting long in the tooth. Maybe they get a few more Walking Deads or something else. But the Fear of the Walking Dead, not anywhere as good as the Walking Dead. I'm having problems with that. April 27th, another nice spike out here for ACO Brands, ACCO. This is what, the 27th of April, 1.8 million shares. We get above that on June 9th by 12 cents, back into the trading range the next day. Today, down on light volume, 286,000 shares so far. So a lot of these stocks, just no juice at the highs, but not a sign of strength coming off of them, at least not yet. I am, like I said last week, sitting on a couple of long positions that are acting very well, but not in any index position that would make me think that I would want to get into any trade that is going to last, the next 12 hours or something. Just light and variable. Light and variable. The doldrums, folks. And it's a hot summer. It's steamy down here in Florida. And doldrums in the market. Time for some sun tea. It'll make me feel better. We'll be back after this break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Of course, probably other than Facebook, or not Facebook, LinkedIn and Microsoft today, the big news to me are the way that the European banks are moving. If we look at Deutsche Bank, of course, this thing made a big low, and Mr. Draghi came out, threw cash all over the place. It can only matter for a while. Reality will actually eventually catch up to everybody. The money he throws around can make things kind of go away for a little while, but reality always comes back.
I reject your reality and insert my own.
Well, Draghi tried that, and it did not work. He's back, or at least we're coming back to this Deutsche Bank low, which is the February 9th low at 1478. It had 10 million shares, high volume low. And guess what? It had not been tested. We're down to $15.18 today. So we got about another quarter to go, 3.9 million shares. Hopefully we pierce that low and then close back in it if you want to go long or break it with higher volume, and but you can kind of see that eventually reality does come back in a great deal of those. Don't think you're going to see a great deal different in the rest of the financial stocks out here that have been plummeting through the lows. Of course, Credit Suisse has already broken its previous low. Volume actually fairly decent, 5 million shares today compared to the February 11th low that came in with 4.4 million shares. So it has broken already, and that I think is significant. Volume is significant. Let's take a look at HSBC. HSBC. And what do you got out here? Not quite as bad. This down, not as much volume. There is a nice little gap where this gapped up on the 13th of April. Did so with, 3.9 million shares. But unfortunately into it with 4.5 million shares on Friday. Today, a little lighter volume so far, 2.7 million shares. So this one may find a shovel of sand underneath its keel before it totally sinks. Let's take a look at BAC. Just to see. Bank of America. Of course, U.S. Bank's a little bit better out here. Let's see what else we have. This one's kind of coming back into its movement, which is this 413 gap up, 138. Let's call it 138.6 million shares that day, 90 million shares now. So at least the U.S. banks maybe be looking just a tad better, but all these things are kind of coming back. The energy on the way down, good enough to make me think that I wouldn't want to play this for a bounce. Let's see if there's any more in these. LYG, we have time for that? Yeah, LYG. 2.6% down on it. Lloyd's Banking. So pretty much exactly what we were looking for all of this. And that is just light volume, 4.5 million shares. Lighter volume today in Lloyd's, so not too bad. 2.3 million shares so far today. You need to come in with less than 4.5 million shares, and certainly this gap of 4.7 million shares on the 25th of February. So my guess is the most indicative stocks of the next few days will be these European banks and whether or not they can hold these levels. Keep an eye on them. Keep an eye on the skies. Who are you going to call? You're going to call me. So when you can, not when you have to. We'll see you here tomorrow, same bat channel, same bat time. Take the blue pill.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.